It's been about a year now since the Bank of Canada raised its overnight rate to 5% in an effort to curb inflation and cool the real estate market. So you might be wondering, what effect has this had on real estate prices? In my market of Kelowna, one home type is down 8% since this time last year, and the national average price is down about 4%. So in this month's market update, we'll dive deeper into prices in the Okanagan and see if higher interest rates really have made a difference when it comes to real estate prices. And make sure you stick around until the end so you can find out, are we still in a balanced market or have we moved into a buyer's market, and what that could mean for prices going forward. I'm Tyrell Boake, a realtor in Kelowna, and on this channel, I help you navigate the real estate market and provide you with useful information so you can make informed decisions that make sense for you. If you get any value out of this type of content, make sure you hit the like and subscribe buttons so you don't miss out on future updates. And whenever you're ready to buy or sell, or you just want to talk about real estate and ask a few questions, hit the first link in the description where you can book a call with me at a time that works best for you. So what's going on with the Kelowna real estate market? The last year has been a roller coaster ride of price fluctuations, with the benchmark price going up or down from one 30-day period to the next. But now that we're 1 year into the Bank of Canada's interest rate being at 5%, we should be able to look at the whole year and see if there's a trend that's emerging in prices and to see if the interest rate has really made a difference on what the benchmark price of a home is. The national average price of a home is down about 4% over that period, but let's take a look at what's happening locally. The first thing to look at is the number of sales this year versus last year. The green line shows us that in 2023, the spring was a very busy real estate market locally, and then the Bank of Canada had 2 rate increases in June and July to ultimately get to that 5% rate, and you can see through 2023 that sales were declining. That same market happened in this first start of 2024, as we did see the number of sales increasing through the first 4 months of the year, but certainly below the levels that we saw in 2023. The last 2 months, those sales have fallen to an even bigger gap from what we saw the year before. But we did see that Bank of Canada decrease just happen in June, and I'm wondering if that's going to cause sales to pick up a little bit more. One significant change that we've seen over the last year is that our local inventory has grown by a staggering 52%. This time last year, we only had a total of 2,900 listings, whereas in 2024, we're up to 4,200 listings. This means that buyers have a lot of choices right now. If we look at the benchmark price of a single-family home, it fell 0.6% month over month from May, down from $1,015,000 to $1,009,000. That benchmark price, though, has fallen 5.7% from this time last year, where it was at $1,070,000 in June 2023 and has fallen to $1,009,000 in 2024. Looking at the benchmark price graph, though, we can see that most of those declines happened in the last half of 2023, and throughout 2024, that price has actually been trending upwards a little bit, but it did have a dip from May to June. This is something to keep in mind going forward. The gap looks big right now with a 5% decrease because we dropped significantly from August to December 2023. As we get later into this year, where some of those months were already declining, that gap of prices from last year to this year is probably going to be smaller. That being said, you can get a home for significantly less right now than you could in the spring of 2022 on average. If we take a look at the benchmark price over the last 5 years, you can see that from 5 years ago, the price is up a considerable amount from around $700,000 to around $1 million, but we are lower than we were in the spring of 2022 and the spring of 2023, and you could consider both of those spring markets as a bit of a bubble. Basically, prices are back to where they were in the fall of 2021. Taking a look at the townhome market, the townhome benchmark price was down 1% month over month from $724,000 down to $717,000. Going out year over year, though, that price is down 8.5% from what it was this time last year, where it was $783,000. The benchmark price since January of 2023 has definitely been volatile, with some months being down significantly, other months increasing, but there hasn't been a lot of consistency in the market other than the last 3 to 4 months, but you can see that it's been a steady decline since March of 2024. Stretching it out over 5 years, you can see, just like in the single-family homes, that the benchmark price over the last 5 years for a townhome has grown. Essentially though, our prices are back to where they were in August of 2021, with a couple of bubbles there in the middle. Taking a look at the condo market, you can see that condos are down 3.6% month over month from 507,000 in May to 489,000 in June. That price is also down a staggering 8.6% year over year. It was 535,000 a year ago, and we're sitting at 489,000 this year. If we look at the benchmark price of a condo going back to January of 2023, you can actually see that condo prices are slightly less than they were a year and a half ago. But if you take that out over 5 years, you can see that there's still been growth in this market. Prices are up from where they were in the spring of 2019, and again in this asset class, you can see that there's been two bubbles in the spring of 2022 and the spring of 2023. If we look at manufactured homes, there's been an 8.2% decrease year over year from 301,000 this time last year to 276,000 on average this year. If we take a look at months of inventory in the central Okanagan, in the single-family detached home market, we're in a buyer's market with 8.9 months of available inventory. The townhome market is also a buyer's market with 7.6 months of available inventory, and the condo market is also a buyer's market with 8.2 months of available inventory. Real estate prices across the Okanagan have definitely decreased since the Bank of Canada raised its overnight rate to 5% last year, with most of that change happening in the latter half of 2023. Prices are trending up slightly in 2024, but not by a significant amount, and not enough to regain that loss that we had in the last half of last year. Prices are certainly down from this time last year by almost 10%. That's enough to call it a major correction, but not necessarily a crash. But as we move closer into the fall of 2024, that gap over prices from last year is going to get smaller and smaller, as we demonstrated, because most of that price decrease happened in the last half of 2023. And for the most part, especially in single-family homes, prices have actually been appreciating since January of this year. Now that the BOC has decreased its overnight rate and signaled that there's probably going to be more of those to come, we're not going to see prices decrease as much as they did in the fall of last year. That being said, we are in a buyer's market, so there's not going to be pressure on prices to go up either. So I see us having stability through the rest of the year. Let me know what you think in the comments below. Do you think we're going to continue to see some price decreases through the rest of this year, or do you think we're in store for some stability in the real estate market? For now, we're in a buyer's market, and it could be a great time for you to buy right now, depending on your real estate goals. If you're a seller in this market and you need to sell, your price needs to be compelling or you're not selling. It's not 2022 anymore, and as a friend said recently, we used to get competing offers, but now we're competing for offers. Thanks for watching, and we'll see you next time.